be good and safe. Children, in previous video, I have started a new chapter, chapter 2, theory base of accounting. Children, in this video, already I had explained some basic concept like business entity, money measurement, going concern, accounting period, cost and dual aspect. So children, today video I will continue other concept like revenue, matching, full disclosure, consistency, objectivity. So let's continue. So children, first concept is revenue. First, I have to explain the meaning of revenue. Children, meaning of revenue. When the firm has sold the product on cash or credit basis, on same time that amount, sometime that amount has received, that is revenue. But in other some cases, not all the amount has received to the firm. Likewise, firm has released the goods or services to customer, according that amount will be received. Okay, so according this revenue concept, it's a principle that is a cornerstone of accrual. Together with the matching principle, they both determine the accounting period in which revenue and expenses are recognized. Example, if rent for the month of March 2017, even if it is received in April 2017, then this amount we will taken in the year 2017 of 31st March, not into the financial year beginning on April 2017. So children, according this concept, firm has record all the revenues, income which firm has already received or will be in future. Second concept is matching concept. Children, in this concept implies that all revenues earned during an accounting year is start from 1st April and it is ending time on 31st March 2000 dash. Accounting year, whether received during that year or not. So children, again I had explained, it implies that all revenues earned during an accounting year, whether received during that year or not, and all costs include whether paid during the year or not, should be taken into account for calculating profit loss for that year. So children, according this principle, firm ascertain the amount of profit or loss incurred during a financial year. According this, firm calculate the net profit or loss which the firm has incurred during a financial year. Next concept is full disclosure. This concept implies that financial statement should disclose all material information which is required by the proprietor and other users to assess the financial accounts of the business unit. According this, information provided by financial statement are used by different groups of people like as investors, lenders, suppliers and other various financial decisions. So, according to the NCERT, full disclosure concept, information provided by financial statement are used by different groups of people like as investors, lenders, suppliers and others in taking various financial decisions. In the corporate form of organization, there is a distinction between those managing the affairs of the enterprise and those owing it. Financial statements, however, are the only or basic means of communicating financial information to all interested parties. It becomes all the more important, therefore, that the financial statements make a full, fair and adequate disclosure of all information which is relevant for taking financial decisions. Next concept is consistency. So children, according this principle requires that accounting practice, methods and techniques used by a business unit should be consistent. With the help of this principle, any firm can be comparison current year to any previous year. For evaluating the financial position of the business, the accounting information provided by the financial statements would be useful in drawing conclusions regarding the working of an enterprise only when it allows comparisons over a period of time as well as with the working of other enterprises. Next concept is conservatism. So children, it consider all possible losses but ignore all possible profits. This principle provides guidance for recording transactions in the books of accounts, and it's based on the policy of playing safe. So this principle direct to the firm that in such a way the firm it does not get lost. So according this concept provides guidance transactions in the books of accounts and is based on the policy of playing safe role in the firm. Next is materiality. According this principle, only those transactions should be recorded which are material or relevant for the determination of income from the business. Other transactions should be ignored. So, in this concept, only materialistic transactions should be recorded and other transactions should be ignored. The concept of materiality requires that accounting should focus on material facts. Efforts should not be wasted in recording and presenting facts, while are immaterial in the determination of income. Example, money spent on creation of additional capacity of a theatre would be a material fact as it is going to increase the future earning capacity of the enterprise. So children, which transactions should be increase our earning in the future, that type of transaction should be recorded in this concept. Next is objectivity. According this principle, justify the all the transactions should be recorded in an objective manner. So, related all the transactions document should be correct and also should be recorded in a systematic manner. Each transaction should be supported by objective evidence like voucher. The concept of objectivity requires that accounting transaction should be recorded in an objective manner, free from the bias of accountants and others. This can be possible when each of transaction is supported by documents be possible when each of transaction is supported. Example, the transaction for the purchase of material may be supported by the cash receipt for the money paid if the same is purchased on cash basis or copy of invoice and delivery challan if the same is purchased on credit. So children, according this concept, all the transactions and evidence should be correct and all the records should be evidence can be evidence if it is correct. So according this, all the transactions should be recorded in the business in a systematic manner which can be useful in our future when that time it will be required. So children, in this chapter we have discussed children, according this single owner simplest form of business entity because in a single owner firm also called OPC, one person company, owner is responsible for all the profit loss of the business. So it is called business entity concept. The concept of business entity assumes that business has a distinct and separate entity from its owner. It means that for the purposes of accounting, the business and its owner are to be treated as two separate entities. So when the owner withdraw any amount from the business for his personal use, that is called the drawings. It is treated as a reduction of the owner's capital and consequently a reduction in the liabilities of the business. Next term is money measurement concept. Children, according this, those transactions are recorded in accounting which are expressed in terms of money. Suppose in a company, two persons quarrel each other. So it will not be recorded in the accounting because it is not a monetary term. Or if on a particular day a business has 50,000 cash in hand, 5,000 kilogram of raw material to manufacture the product, 5 chairs, 5 machines. So we record all these items in the accounts because all are these expressed in monetary terms. Okay. So according to the NCERT money measurement concept, the concept of money measurement states that only those transactions and happenings in an organization which can be expressed in terms of money, such as sale of goods or payment of expenses or receipts of income, etc., are to be recorded in the books of account. Children, next concept is going concern concept. Children, as per this concept, it's assumed by all the businessmen that the business will be continue for a long period in the future. So, firm record all the transactions in the books of the business because the firm assume that it is a continuing enterprise. Example, if a machinery is purchased and it will be work for the next 10 years. So, the cost of this machinery will be used over the next 10 years for calculating the net profit or loss of each year. So, according this, the concept of going concern assume that a business firm would continue to carry out its operations identity for a very long period of time and would be not be liquidated in the foreseeable future. This is an important assumption of accounting as it provides the very basis for showing the value of assets in the balance sheet. An asset may be defined as a bundle of services when we purchase an asset. For example, a personal computer for a sum of rupees 50,000. What we are buying really is the services of the computer that we shall be getting over its estimated lifespan, say 5 years. Useful life 5 years. It will not be fair to charge the whole amount of rupees 50,000 from the revenue of the year in which the asset is purchased. Instead, that part of the asset which has been consumed or used during a period should be charged from the revenue of that period. So children, according to going concern concept, again, as per this concept, it's assumed by all the businessmen that the business will be continue for a long period in the future. So, firm record all the transactions in the book of the business related to business transactions because the firm assume that is a continuing enterprise. If a machinery is purchased and it will be work for next 10 years, according this, so the cost of this machinery will be used over the next 10 years for calculating the net profit or loss of each year. Next term is accounting period concept. Children, all the business firm adopt it that financial year beginning on 1st April and ending on 31st March in the next calendar year. So, it is accounting period. According this, all the business firm have maintained all the records which the firm have recorded in during the financial year. According to the NCERT, accounting period refer to the span of time at the end of which the financial statements of an enterprise are prepared to know whether it has earned profit or incurred losses during that period and what exactly is the position of its assets and liabilities at the end of that period. So children, for accounting period concepts, the firm can be check the financial position of the business, also check the value of assets and all the values of assets and liabilities, and also check the capital assessment of the accounting period. Next term is cost accounting cost concept. According to this concept, an asset is simply recorded in the books of accounts at the price at which it was purchased, but its amount will be changed every year due to depreciation. Depreciation, also called reduction of asset. Children, suppose if a businessman purchase a building of rupees 20 lakh in 2020, then same amount will be recorded in the books of account. If after 2 years later the amount of the building is rupees 60 lakh, so 40 lakh rupees increase in the value of building, then that time the firm will be record the amount of this building in the books of accounts 40 lakh rupees. So according this reduction of the value called depreciation, and if the assets value has increased, that is called the appreciation. Cost concept. The cost concept require that all assets are recorded in the books of accounts at their purchase price, which includes cost of acquisition, transportation, installation and making the assets ready to use. Example, on June 2005, an old plant was purchased for rupees 50 lakh by Shiva Enterprise, which is into the business of manufacturing detergent powder. An amount of rupees 10,000 was spent on transporting the plant to the factory site. In addition, 50,000 rupees was spent on repair for bringing the plant into running position and rupees 25,000 on its installation. The total amount at which the plant will be recorded in the books of account would be the sum of all these rupees 50 lakh 50,000. So children, according this cost concept, which amount the firm has recorded, that time in which amount the firm has purchased that asset, that is called the cost concept. And after year to year, this amount will be reduced, and in some assets it can be appreciate or can be appreciate means increase. So some amounts every year will be depreciate, and some amount every year will be depreciate or appreciate. Both the terms will be used on the assets. So according this, appreciation means benefit and gain, and depreciation means when all the assets had reduction in the value. That is called the cost concept. Children, next term is dual aspect concept. So according this concept, account has based on two aspects, and every transactions affect at least two accounts. If one account is debited, then second must be credited. The system of recording transactions based on this principle is called double entry system. According this, always both the side debit and credit should be equal, and we will follow this equation always. A is equals to L plus C. A means assets, L means liability and C means capital. So according to the book, dual aspect is the foundation or basic principle of accounting. It provides the very basis for recording business transactions into the book of accounts. This concept states that every transaction has a dual or twofold effect and should be recorded at two places. In other words, at least two accounts will be involved in recording a transaction. This can be explained with the help of an example. Ramesh started business by investing in a sum of rupees 50 lakh. So it will be capital. The amount of money brought in by Ram will result in an increase in the asset cash of business by rupees 50 lakh. At the same time, the owner's equity or capital will also increase by an equal amount. It may be seen that the two items that got affected by this transaction are cash and capital account. Example to understand this point further, suppose the firm purchased goods worth rupees 10 lakh. On cash, this will increase an asset stock of goods because the firm has purchased 10 lakh rupees goods in cash. So stock will be increased and cash will be decreased. On the one hand and reduce another assets on the other hand. So children, according this, 10,000 rupees decreased and 10 lakh rupees cash decreased and 10 lakh rupees goods will be increased in our stock. If the firm purchases a machine worth rupees 30 lakh on credit from reliable industries. So children, if a firm has purchased a machine that worth is 30 lakh rupees and the firm has purchased this machine on credit basis 30 lakh rupees. So according this, firm has purchased a machinery, so machinery will be debit and credit will be credited. Then this type of dual effect take place in case of all business transaction and it is also known as duality principle. So if the firm has purchased 30 lakh rupees machinery on credit, according this, firm has dual aspect. One side debit, firm has machinery will be debit and liability will be credit because firm has not paid the 30 lakh rupees in the relevant to the machinery. So one side debit, machine will be debit plus and credit, the liability will be used as a liability. And all the accounting system we have follow this accounting equation, that is A is equals to L plus C. A means asset, L means. Next topic is systems of accounting into two types. First, single entry system or double entry system. Single entry system also called cash basis accounting. Double accounting system, double entry system also called accrual basis of accounting. So children, first cash basis of accounting. Under this method, only cash transactions are recorded in the books of account. Entries are made only if cash is received or paid. This basic is suitable for professional people like doctors, lawyers, because they only receive the money or paid the money in return. But in accrual basis of accounting, under this method, all the transactions are recorded in the books of accounts which are related to both the aspect cash or credit. According this, the firm has prepared a bill or raised an invoice for credit transactions. This basic is adopted by business enterprises with profit motive. So, according to NCERT, the system of recording transactions in the book of accounts are generally classified into two types: double entry system and single entry system. Double entry system also called accrual basis of accounting and single entry system called cash basis of accounting. Double entry system is based on the principle of dual aspect, which state that every transaction has two effects: benefit and giving of benefit. So dual aspect system, we have used two types of transaction, debit or credit, and every time these terms will be equal. Always both the accounts will be equal. Each transaction therefore involve two or more accounts and in recorded at different places in the ledger. So first we have record all the transactions in ledger. After that we have post all the transactions in ledger. The basic principle followed is that every debit must have a corresponding credit. One account is debited and the other is credited. Basis of accounting. From the point of view, the timing of recognize of revenue and cost, there can be two broad approaches to accounting. These are cash basis or accrual basis. Under the cash basis, entries in the books of accounts are made when cash received or paid and not when the receipt or payment becomes due. So children, according to cash basis concept, we have used only cash transactions which have received or paid, but any credit transaction we have not record according in the concept cash basis. And accrual basis revenues and costs are recognized in the period in which they occur rather when they are paid. A distinction is made between the receipt of cash and the right to receive cash and payment of cash and legal obligation to pay cash. Under this system, the monetary effect on account, a transaction is taken into account in the period in which they are earned rather than in the period in which cash is actually received or paid by the enterprise. So children, according to accrual basis, we have used both type of aspects, cash or credit, so which are related to both the aspect cash or credit. According this, the firm has prepared a bill or raised a invoice for credit transactions. This basis is adopted by business enterprises with profit motive. So children, you have to learn all these concepts. So take care. Goodbye.